Let's talk about NIO stock, because even with today's pullback, the momentum around this company feels anything but over. NIO closed the day at $4.71, down roughly 2.5%, and while that might seem like a letdown on the surface, the bigger picture is what really matters. We've now seen an over 40% gain in the month of July, and much of that has been fueled by a change in sentiment, a promising pivot in company strategy, and a swelling belief that NIO could be on the brink of a major breakout, both fundamentally and on the charts. So, what's really behind today's price action? Well, the first thing to say is this: after a run like we've seen, it's natural for the market to pause and catch its breath. These aren't signs of weakness, they're moments of consolidation. They help shake out the short-term traders and build a stronger base for the next leg up. We've seen this pattern before, and for long-term bulls, today is more of an opportunity than a warning sign. Let's talk fundamentals for a moment, because that's where the narrative gets exciting. NIO is not just an electric vehicle maker anymore. With the launch of the Onvo L90 and the Firefly sub-brand, they're going after something much bigger than just luxury EVs. They're targeting the Chinese middle class. These are the people who want value, reliability, and a touch of modern design. And NIO is offering all of that while adding something no one else can replicate easily: their battery swap network. According to the most recent data, over 40% of NIO's June deliveries were from these mass-market brands. That is an extraordinary pivot in such a short time. It shows that demand is real, and that this isn't just a concept, it's a strategy in motion. And the market is noticing. Even more promising is what's happening behind the scenes. CEO William Li has made it clear, NIO is targeting adjusted operating profitability by the end of 2025. And that's not just a hopeful projection. The company is actively trimming fat from its operations. They're aiming to reduce their SG&A costs to under 10% of revenue, which is a major lever for improving margins. They're also refining their R&D spending, getting more efficient, and doubling down on what works. And don't overlook the battery swap story. Right now, 20% of their swap stations are profitable, a figure that's only expected to grow as utilization rates increase. Think about it. This isn't just about selling cars. It's about building a recurring revenue model around energy delivery. Tesla has superchargers. NIO has battery swapping. Both serve a purpose, but NIO's model could be more monetizable over time, especially in a dense urban environment like China. Now, you might be wondering, if the future is so bright, why are we seeing any red days at all? Great question. The truth is, the market is still skeptical. And in a way, that's a good thing for patient investors. With NIO trading at just a fraction of its historical valuation, well below even modest forward revenue multiples, there's a lot of room for sentiment to shift. And it doesn't take much to trigger that shift. Short interest remains elevated, hovering around 9 to 10%. That tells us that a lot of traders are still betting against this company. But as we've seen before, that also sets the stage for potential short squeezes. And when that kind of move comes, especially in a stock like NIO that's got a vocal retail following, it can be explosive. So what are the catalysts we should be watching now? First, all eyes are on the July and August delivery numbers. These will be critical in confirming whether the L90 launch is more than just a marketing success. If deliveries ramp faster than expected, analysts may start revising their models, and that's when institutional investors tend to take notice. Second, we're heading toward NIO's Q2 earnings report, likely coming in August. If the company shows even modest progress toward its profitability targets, or delivers stronger than expected margins, it could completely change how the market sees this stock. Third, don't underestimate the power of sentiment. Social media buzz is picking up. Forums are filling up with bullish takes. And if we get a surprise pop in volume tied to some good news, whether it's delivery numbers, partnership announcements, or earnings beats, we could see another wave of retail and momentum buying. Now, I also want to touch on something that often gets overlooked in the NIO conversation: the brand. Despite its ups and downs, NIO still holds a strong brand reputation in China. It's not just a car company, it's a lifestyle brand. Their user events, their NIO houses, their app ecosystem, it all adds up to a sense of community. That matters. In a crowded EV market, that brand equity could be one of their most valuable long-term assets. To wrap it all up, today's price action is just part of the process. Stocks don't go up in a straight line, especially those trying to redefine themselves. But NIO is doing the hard work. They're shifting from being a high-end niche player to a serious contender in the mass-market EV race. They're building infrastructure that can scale. And they're showing signs that financial discipline is becoming a real priority. The stock may have pulled back today, but the story hasn't changed. If anything, it's getting more compelling. As always, I'd love to hear what you think. Are you still holding? Buying the dip? Or waiting to see how the next few weeks play out? Let me know in the comments, and if you're enjoying these updates, hit that like button, subscribe, and turn on notifications so you never miss a beat on the NIO story. Thanks for watching, and I'll see you in the next one.